Hi traders, welcome to this week's Keyzone Traders Trade of the Week. So this week there was a few options for the trade of the week. There was some really textbook setups that went straight to their target. There was some textbook setups that went to their loss and stop loss. So there was things that we could have learned about both of those trades in terms of the setup and actually trading. But in fact, this week I'm going to talk about the trade that never was. So let's go take a look. Hi traders, so this week's trade of the week is the trade that never was, and I'll explain to you why I think it's a good lesson to have. As I say, there was a couple of options that I could have shown which were trades that I did take, which would have taught some good lessons, but I think this is actually also a very important lesson in trading. So basically the bit that I really want to focus on here is, so this is the report from Wednesday the 27th of October. It's sent out pre-market. It's sent out on our Twitter channel, so come follow us on Twitter to receive these absolutely free first thing in the morning before the market opens. These are our zones of support and resistance and zones of reference, and we give a bit of analysis around which zones we should be looking to trade from and our overall view of the market. So we've been saying that we are still bullish in the market for a while. We are, until we break below 405 to 430, we do still keep a bullish bias. That's where the bears will wrestle back control. So we've got a bullish bias, but the bit I want to focus on is this bit at the bottom. It says, we have created a very tight range, so we should be aware of false breaks. So now let's go and have a look at the action and the trade that I wanted to take. So this is the opening of the market. As I say, we had identified that the pre-market action had created a very tight range, and often when you see this, it leads to false breaks. So when you notice that, if you see a false break signal and it's with the overall trend, and we know that at the moment overall we're bullish in the market, that is quite a strong signal to take, and it's a signal worthy of taking. So we had the market open here on this candle here, and we shot down through this zone of support that we had, and we had the overnight lows at 714 as well. So we had taken out a level, we'd taken out the zone, and then we got a really nice big strong bullish candle back above the level. So this, for me, I'd noted this as a possible support zone. It's a fairly weak support zone, but it is still a support zone in an overall bullish environment, and we recognise that there could be a false break signal, and we should be wary of false break signals, and we got the false break signal on this pattern here. So we have a trade that we really want to take. We've taken out the overnight lows, so we've taken out some stops, we've pulled people into the market, we've stopped other people out, it's done its liquidity run, and it's gone back and it's closed with quite nice and strongly above the level. So it's a really good false break signal, and the entry for this would have been above here. The high of that bar was, bear with me 1 second, let me just take, so the high of that bar was 719.5, so we'd be in at 21 with a stop below the low at 01. So in at 21, stop there, stop at 01, and would have a 20-point target up at 41, which is up here. So because it's a fairly weak zone as well, we would just be going for a one-to-one target. Because it had created quite a tight range as well, we're just going for one-to-one target. So as you can see, this trade has done exactly what we wanted it to pre-market. We talked about the false break. We've got the nice false break pattern. We've got the signal. It enters into the trade and goes straight to the target, literally up, straight up, straight up, straight up, bang, in, and you're out within 2 and a bit minutes. So it's a lovely trade. However, I missed it, not because I didn't take it, but because this bar closed, and as you can see, there's a little gap up, and whilst I was entering my order, the market actually shot up here. So by the time I'd actually placed my order, the market was above my entry, and I was left not in the trade. I still wasn't in the trade. So and it came up and it never come back to give me a chance to get in again. It just went straight to its target. So this can happen. in trading. There are ways to mitigate it, but unfortunately it doesn't matter. There are some times that you're just going to miss a trade. Now, what generally happens to retail traders is, and certainly new inexperienced traders, is they see the setup, the market rallies up here, and they think, oh, it's doing exactly what I want it to do, and they get in just where the market is up here. And the problem with that is if your entry is all the way up here, say it was actually at 28 when my order went in. I remember looking at the market and the order was at 28. So say you just enter the market blindly at 28 because you want to get into the trade. Well, now you have a problem, because now you have a 27-point stop and you only have a 13-point target. So your risk to reward doesn't make any sense, because the times that you need to, this trade needs to win 3 times out of 4 for it to become profitable and for it to have an edge. And so the risk to reward doesn't really make sense. The other thing you can do is move your target. So you now want a 27-point target. So you're up to 55. So your target's all the way up here. Well, what happens to the trade now? The trade now ends up being a loser. And in a winning trade has now turned into a losing trade. So unfortunately, this is a textbook setup. It done exactly what I wanted it to. I was prepared for the trade. I had my order in. I just missed the trade. But the lesson to take from this is do not go chasing, because either your risk to reward will be out, or you're going to end up taking trades that should win that end up going to lose. So rather than do that, you should keep your parameters the same. You miss the trade, you move on to the next one, and therefore I was still break even for that morning session. At that time I was still flat. I hadn't taken a loss, I wasn't in a trade, hadn't gone chasing, I just moved on to the next opportunity. So I hope you find this useful, guys. Like I say, it's an important lesson to learn for new traders, not to go chasing the market, because it takes away the edge of your trading plan. You are going to miss trades, unfortunately. It is just part of trading. You have to accept it as part of trading. The fear of missing out is a strong emotion that a lot of traders suffer with, but like I say, it is something that you just have to move on from, and you have to accept that there are going to be trades that you're going to miss. So I hope you find this useful, guys, and I'll speak to you again next week.